So another stock that has hit my radar screen is Intrasoft Technologies, this one. So let me open this and see, this has hit my 3-month RS80 filter. What is 3-month RS80 filter? So the relative strength of this stock is 80 or more on a 3-month basis. So if I compare the 3-month performance of this stock with all the other stocks in the Indian stock market, then this stock has done better than 80% of all the stocks in the Indian stock market on a 3-month performance basis. So this stock must be in my radar screen. And I'm making this video to show you why I have chosen to reject this stock, in spite of the fact that it is in my radar screen, in spite of the fact that it is forming a base and things like that. I continue to make this video where I keep rejecting stocks to help you understand that if I am selecting a particular stock, to select that particular stock, I have rejected at least 100 stocks. Okay, so it's not that I am selecting one stock and staking my money there. No, before I select a stock, there are 100 stocks that I have rejected. So I need to show you which are the stocks that I'm staying away from, because the market will keep throwing opportunities at us. Okay, and if we keep taking every opportunity, we will get trapped. So we need a system which allows us to sift through majority of all the opportunities that the market is throwing at us and find out what are the gems which meet our criteria. And this stock has not met some of my criteria, which I will discuss with you. So my YouTube channel will contain more videos of the trades that I have not taken compared to the trades that I have actually taken, because rejection is a big part of trading. Our trading performance is dependent or is a function more of what we choose to reject than what we choose to select. I continue to say that in every one of my videos, because I have seen people taking like 5-10 trades in a single day. That's too much trading. If you are a swing trader, like 3-4 stocks a week is fine. If you are a positional trader, 1 or 2 stocks is in a week is extremely good. Okay, so to select 1 or 2 stocks in a week, we have to reject like 100, 200, maybe 500 stocks in that week. So we need to have a criteria which allows us to effortlessly reject stocks. But anyways, that's a little bit of introduction and theory. Let's come back to the practicals. Intrasoft Technologies, let me go to the chart. Sorry, what happened? Okay, Intrasoft. Intrasoft Technologies. Look at this base. So blue, green, red. So the stock has just become a stage 2 uptrending stock. The blue line is the 50-day simple moving average. The green line is the 150-day simple moving average. And the red line is the 200-day simple moving average. So once I get that blue, green, red combination, I am interested in the stock. However, straight away, I am rejecting this stock because if you look at this base, okay, if you look at this base, it is too wide and too loose, okay, and too tall. And here, if you look at this buy point, even if we take this as the buy point, the distance between the current closing price and this buy point is almost 9 to 10%. I want that distance to be less than 5%. Okay, I want tight price action on the right side. So just by looking at the chart, even if it is a stage 2 uptrending stock and it has just entered stage 2, which is a very positive sign, in spite of those positive things, I'm straight away rejecting the stock. I'm not even looking at MarketSmith data. I'm not even looking at rankings, because even if one of my basic criteria is not met, it's out. But let's look at MarketSmith data as well to see what this company has to offer. Because if this stock tightens on the right side, okay, if there is tight price action, low volume on the right side, then probably we might be looking at an opportunity. So let's look at what factors what are the ratings or rankings of this stock. Let me go to the daily time frame chart. So straight away you can see poor rankings. Master score, EPS rating, price strength. I want all of these numbers to be more than 80. That is not the case here. Okay. You can see the relative strength was falling all along. Now it has increased because the price has increased. Accumulation distribution rating should be A. B is fine, but preferably A. Group rank is fantastic. So this is an underperforming stock in an outperforming industry, basically. And if I look at consolidated, you see the earnings growth, quarterly earnings growth and quarterly sales growth are very erratic. 13%, 10%, 0%. So it's declining. Then again 3%, 2%. There is hardly any sales growth. Okay, consistent and stable sales growth. If you look at this, sometimes it is positive, sometimes it is negative, again positive, again negative. So inconsistent. So the earnings stability is 99. The lower this number, the better. But in this case, it is 99. So stability wise, it's very poor. See, negative earnings. If you look at the past 15, 20 quarters, it has been a disastrous performance. Okay. And not many funds are holding on to the stock. That is another negative factor. Management does not own more than 50% stake. That is another negative factor. Return on equity is less than 17%. Another negative factor. P ratio is near the lower end of the 5-year P range. Again, a negative factor. Okay. So there are more negatives than there are positives in this stock. Moreover, this is the nano is a micro cap stock. Okay. The market capitalization is extremely small. I have seen companies where the market cap is 5,000 crore, 100,000 crore. Here it is only 285 crore. So it's a very small company. Okay. It's a very small, tiny company. Liquidity is there. I can see good volume coming in, but fundamentals are not there. If there are no fundamentals, there is no question of taking a position in the stock. Even from the swing trading point of view, okay, I want these numbers to be very strong, 80, 80, A and below 20. If that is the case, only then I might think of entering the stock if it forms a tight base on the right side. But given what I have discussed with you till now, this stock doesn't look convincing. So that is the reason why I reject this stock. Very simple. Okay. I don't take this much time to reject a stock. I am taking this much time to explain to you in the video. But when I am scanning stocks, I am in fraction of a second, I am rejecting stocks. And I want you to acquire the skill. So the more the videos that you watch of me rejecting stocks, the better you will become at rejecting stocks. You may not have to spend 10 minutes trying to figure out whether you want to reject a stock or not. It should happen in less than a second. Okay. And I'm sure if you continue watching my content, you will acquire that skill just by looking at this wide and loose and tall base and no tight price action on the right side. The distance between the current closing and the pivot point is more than 5%. That's it. I'm done with the stock. I don't have to do anything with this stock. Okay. It's very simple to reject a stock. Okay. Thank you so much.